For you in today's letter, both stock and option picks, and we were proposing a trade here on the QQQs since it's a bullish pattern, and with the oversold market oscillator, we think we're going to get a short-term bounce at least, even though we've discussed the mixed market internals for being on guard for the rally ending. But what we wanted to discuss with you here is, should we buy the stock as a bullish long swing trade? And I was showing Greg the option quotes here, and I actually told Greg, I said, you know what, Greg, we can get all of the upside benefits of the QQQs going up, buying the stock, but we can do it with leverage and limited loss, buying this in the money call. So somebody would have to have rocks in their head to buy the stock over this long call. And that's what I wanted just to very quickly highlight, why that is so obvious to us. We obviously start with the bullish pattern, the QQs here set up last Thursday. It closed with a nice bottoming tail, minor support, rising 20-period moving average, gapped up, filled the gap, and closed near the upper end of its range with another bottoming tail, suggesting a daily and weekly breakout. So could you buy the QQQ stock? Sure you could. Let's, though, look at the in-the-money call options that expire this Friday. So that's only 4 to 5 days of time. And our option students know that as a general rule, we never like to buy short-term options, particularly out of the money ones, because time decay is like an eroding ice cube, which creates headwinds to the option buyer. The exception to that rule is when I tell people, if you get it for free, meaning you're paying very little time value for that option. So this in the money $129 call strike price here, the stock is trading at 131.39, so a 129 call option is $2.39 in the money. It has intrinsic value. So if we even pay the offer here at these current prices, $2.42 a share, that's only 3 cents of time value. So that's giving us a delta of 1.0, which is being equivalent to stock. Being long stock has a delta of 1.0. The closer you get to in the money, like this 131, 131.5, at the money options are 0.50, meaning that the call option will only rise 50 cents for every $1 rise in the stock. But in this case, in summary now, we're getting the benefit of long stock. We aren't paying little to no time value. We have leverage because we're going to get the same upside benefit as a long stock buyer for only paying $2.42 a share, not $131.39 a share. Plus, we have limited loss. If we have some market disaster and we get a $10 gap down in the Qs, hypothetically, if you bought 1,000 shares of the Qs, you've lost $10,000. If you bought a 10 lot of this call option, as with any option buyer, your maximum loss is what you paid for it. Buying a 10 lot of these Qs at $2.42 a share is only costing us $2,420, not $131,000 and change. And one final thought on the option buying, since so many people are afraid to buy, thinking that if the stock doesn't move, then the option is going to expire worthless. That is 100% accurate with out of the money options if they don't move. Since this one is so deep in the money, even if the stock just chops around into expiration, we are only going to lose our time value of 3 cents a share, not the intrinsic value part of 239 a share, unless, of course, it expired below 129, which we would never let happen because of our Hope risk that management. Helps. Have a marvelous trading week. And as always, we will keep you updated with our intraday updates. Have a great trading week.